All right, let's dive right in. If you're looking at the EB-5 investor program, you're staring down a really big decision. Do you fund your investment with a secured loan or an unsecured one? Now, this choice, it's going to shape your entire journey. So today, we are breaking down exactly what each path means for your application, your money, and your future. Let's get to it. So here's what we're going to cover. First, we'll talk about why this loan is so important. Then we'll walk through Path 1, the secured loan, and Path 2, the unsecured loan. After that, we'll put them right next to each other for a direct comparison. And we'll wrap up with some key questions to help you figure out which path is the best one for you.
Before we get into the nitty-gritty of each loan type, let's be crystal clear about something. This is way more than just a financial detail. The way you structure your loan, it's literally one of the cornerstones of your entire EB-5 petition.
I mean, just think about this. Your loan choice touches every single one of these things. Why? Well, because the whole point of the EB-5 program's financial checks is to prove that every single dollar came from a lawful source. They're trying to prevent things like money laundering. So, if your loan is structured poorly or isn't documented perfectly, it can trigger a request for more evidence, cause some major delays, or worst case scenario, even lead to a denial. This isn't just a number on a page. It's the backbone of your immigration strategy.
Okay, so let's get into our first option and see exactly how it works. This is the path that's built on a foundation of tangible assets, things you can actually see and touch that act as a guarantee.
The idea here is actually pretty simple, but it's powerful. You're basically telling the lender, look, I'm borrowing this money, and to prove I'm good for it, I'm backing it up with something valuable I already own, like my house. This takes a huge amount of risk off the table for the lender, and that has some really big benefits for you.
So, what do you get in return for putting up collateral? Well, because the loan is secured, you're almost always going to get a lower interest rate. And from the perspective of your petition, this can really boost your credibility with USCIS. But, and this is a big but, here's the catch. You have to provide a mountain of proof that the collateral itself, the property, the stocks, whatever it is, was acquired lawfully in the first place. That source of funds investigation doesn't stop at the loan. It goes all the way back to your assets.
Okay, so what if you don't have assets you want to use as collateral? Or maybe just prefer not to? Well, that brings us to our second path, the one that relies completely on your financial reputation and your promise to pay it back. With an unsecured loan, there's no property on the line for the lender to come and take. The entire loan is given based on one thing, their belief that you are able and committed to repaying it. You can think of it as a loan that's backed by your good name and your strong financial track record.
Now, this path definitely gives you more flexibility, right? No assets are tied up. But that flexibility comes at a price. The interest rates are almost always higher because the lender is taking on more risk. It can also be a lot harder to get a loan of this size without collateral, and you can bet that USCIS is going to shift its focus and scrutinize your personal creditworthiness and your documented repayment plan intensely.
All right, time to put these two loan types right next to each other. Seeing them head-to-head like this is, I think, the absolute best way to understand the very different things each one is going to ask of you as an investor. And really, this is what it all boils down to. It's the whole choice in a nutshell. Are you leveraging your assets, or are you leveraging your credit? Are you going to be proving the lawful source of your property, or are you going to be proving the strength of your personal financial history? That's it. That's the fundamental question that splits these two paths. Just look at how this table lays out the trade-offs. It's so clear. With a secured loan, yep, you need collateral, but hey, your interest rate is lower. The risk? You could lose that specific asset. Flip it over to an unsecured loan, no collateral required, but your rate is higher, and the risk shifts from a specific asset to a much broader personal liability. And check out that shift in USCIS scrutiny. It moves from the history of your property right over to your personal ability to repay the debt. So let's move into our final section and see how all of this comes together into a practical framework. I mean, how do you actually make this choice? Well, it really just comes down to answering a few key questions about your own situation. This is the first gate you have to pass through. Do you have significant assets like real estate or investments? Okay, great. But more importantly, can you trace and document beyond a shadow of a doubt that they were acquired legally? If the answer to that is no, well, the decision's kind of been made for you. The unsecured path is really your only option. Now, this one is deeply personal. Really think about it. Are you more comfortable with the specific contained risk of losing one piece of property if things go south? Or are you more comfortable with a general,
personal liability that doesn't tie up a specific asset but could have wider financial consequences. There's no right or wrong answer here, just what's right for you. If you're leaning toward an unsecured loan, this is the final boss. This is the ultimate test. Your credit history has to be basically spotless, and your ability to present a clear, convincing, and thoroughly documented repayment plan to USCIS is absolutely non-negotiable. They have to be completely convinced that the loan is legitimate and that you, and you alone, are fully responsible for it. And of course, while this explainer gives you the framework, it is no substitute for professional, personalized guidance. Your situation is unique. You've got to talk to experienced immigration attorneys and EB-5 regional centers. It is absolutely essential to get their help in structuring a loan that's not just compliant, but is actually optimized for your success. So, here's the big takeaway. The choice between a secured and an unsecured loan goes so much deeper than just interest rates. It is a strategic decision that has a direct impact on the strength and integrity of your entire EB-5 petition. You're not just picking a loan, you're laying the financial foundation for your new life in the United States. And the only question left is, which foundation is the right one for you to build on?